Good morning, it's Harvey Jackson. Just going to get through some news items, the U.S. government shutdown and how that could impact the market. The last time that there was any significant time, there was no reports coming out of there. So we got our quarterly stocks report that just came out, and it was bearish to the market on just about everything. As you can see here, the numbers were pre-report range was quite a bit lower on the corn and wheat especially, and then it still had a significant impact on the market. Market did not want to see those additional bushels added, even though the export pace is pretty good on corn and wheat, but low prices tend to fix low prices. So government shutdown leaves the U.S. Treasury operations intact because it's kind of separate anyway. Susan Stroud was just talking about the last time that there was a shutdown. There's lasted 35 days, no reports, no data leaving the markets, and it kind of drifted aimlessly. So there's jobs numbers that are supposed to be coming out shortly as well, and that's not going to come out. So the market is going to be looking for this kind of information. The shutdown. There's no clear path out of the impasse. It's just it's just politically lined. There was already been a funding of the government to prevent the government shutdown. Prior to this, I forget, in March I think it was. Anyway, the party lines are getting drawn, especially as the no wiggle room to help keep Medicaid and all the other things keep funded beyond December, and yeah, it's just going to create a battle of party lines, it seems. India cabinet approves 9.5 billion price to support winter crops. So to help the low prices, the Indian government is actually putting forth some subsidies, basically to encourage some planting. Palm oil kicks off October higher. So you see, in the chart later, that we do have a green candle. Doesn't seem to be following the same suit as the canola and the soybeans, but we'll look at that in a bit here. And just weaker demand is some of the culprit, but not all of it. But looks like we're going to get some chances of some colder weather, and just a shift of weather patterns where the ridging is happening. There is some shower band expected in the next 7 days to hit southern Manitoba, and we can see here that there is some pretty significant weather. It gets down to -5 in some days there next week. Just a quick look at the oilseed market. I thought I would just show this percent of full carry anytime it's over 70%, because what it's taking into account is your interest rate, or close to the interest rate for prime lending, and your storage rate. And the storage rate is a commercial storage rate of 12 cents per ton per day. You take that off, it definitely pays for you to sell in the future. And you can see right here, you got over 80 or near 80% all the way up to May futures contracts, and then even 72%, 73% to July. And if we wanted to sell anything out into July, which was recommended when we're a little bit higher than where we are, and even selling new crop, it's $86 higher, at least on the print that I showed here. Canola down 370. It traded its range all the way down to 396.70. Rapeseed down as well. Soybean oil, it's trading green at the moment, maybe following the crude palm oil, and the wheats are anywhere from 2 cents on spring wheat, but your hard red winter is down 5 to 5.5, and your Canadian dollar is down a little bit as well. So just looking at canola here, put it a few more indicators. So this is your slow stochastics, a little bit of volume, and then there's a pivot point trend line on here as well, and we're right at the pivot point trend line, and where that comes from is these previous lows that we've got, and creating a pivot point right here. So if we break through there, there is a further downward momentum. Now, if it doesn't want to trade lower, we have orders in at the 582. If it does want to trade down into that area, we will be taking profit on those positions. Here's your rapeseed futures, basically chugging along on the bottom end of this trend, and you can see right now the differential price in Canadian dollars between European rapeseed and Canadian canola is $154. This is the range where we're priced at max closer to the 200. Soybean oil futures have been trading right at and below the 200-day moving average, but doesn't seem to want to break that trend line, or not substantially anyway. Here we are with soybean futures, and your pivot point is down here. Let's call it 985's area, and we've already broke the $10 area, so that's a negative as well. But crude palm oil still holding on. Still looks like it's a slightly downward trend. Canadian dollar, it's at a pivot point here right there as well, and we'll see how it continues to act here. Wheat, your Kansas wheat broke the trend, lower again. We're at 494, and your Chicago did as well. And your milling wheat, it broke lower as well. Your corn futures, here's your pivot point is up here, and it's currently looking like it still got this downward momentum as we speak it right now. Your live cattle, chopping away here. It's green though, but it's not making new highs. It's right in the middle of that upward range there. Same thing with the feeder cattle. Lean hogs, had made some higher highs last week and still can continue there. So this one's over. The stocks report is over. Next report would be October 9th, crop production. Not likely to happen if this impasse on the USDA or the funding doesn't happen anytime soon.